Happy New Year, all. Ira Epstein wishing one and all a Happy New Year. Great trading year for you. Today is Tuesday, December 31st, 2024. You know the markets won't reopen tonight. They'll reopen on Wednesday, at the CME group at least, at 5 p.m. Central Time, and then we'll get gradually back into normal trading as the day Thursday rolls around. There will be a lot of news that comes out in the market too. Let me just get into this with you and we'll come back here. I want to remind you that my Bollinger Band course, Outside Day course are free to you if you take advantage of the sale that we have on right now. And that sale means you come in, you purchase the core course. It's normally $599.95. I've taken the price on it down to $299.95. Then $120 is what I normally get for each of those courses. They're thrown in free. Then you get with this, I make sure that if you're not a subscriber to any of my research, you get at least 30 days, you can see that. You get 30 days of the charting software I use here. This software alone is over $100 value a month. And that's not, it's actually inexpensive compared to some of the others. I use other charting services too for different things, and I know what they are. If you saw my bills each month for what I pay for my research and so on, you go, what? Yeah, it's a lot. But this is a big advantage for you. So if you want to take advantage, it's great. The sale ends this week we're in. So if you're trying to say, hey, Monday, I want something from Ira, it's not going to be here, all right? So take advantage of it now. You just go to iraepstein.com, look on the top left, you'll see New Year's sale, or there'll be a cursor up here you can work with. But as I said, news. So let's get to it. The Mortgage Bankers Association will come out at 6 a.m. on Thursday with its numbers. Jobless claims will come out at 7:30. S&P Global Group, their final December manufacturing sector PMI comes out at 8:45. Construction spending that took place in November comes out at 9. At 10 in the morning, you're going to get the EIA petroleum status, and on Friday, you'll get the natural gas. There'll be some other reports, I think, on Friday, too. But that's really what's coming out at you. So as we went into the end of the year, so to speak, gold came back up $22, and all the other metals were down. China did make a move, and they increased the salary of government employees. And they included teachers in that, firefighters, policemen, and they gave them about a $68 on average increase. And they went back to the month of July and they paid it. And this month, December, workers there, according to Bloomberg, have been seeing the increases come because they want people to spend as they get the new year coming. And if you think about it, why not? They have to. The Trump tariffs are going to come at them one more time. Conservatively, another 10% probably. I don't see any headway that's been made between Trump and China. And if you read President Xi's speech today, remember the time differences, he was speaking today. They're already in their New Year time. Got to pay attention to what's going on. He's battening down the hatches, and they're ready for the, if you will, the tariff war with the U.S. So that's where you're headed with them. I don't know that you'll do that with Canada, Mexico, Europe. We have to see how this is all going to play out. I saw in Canada, we were looking, I think it was Alberta, the Prime Minister, talking about the oil that her province sends. And I don't know if you realize it, but in Canada, the oil lands and all are owned by the government. They're not owned by the private sector as a whole. All right, in the gold, up, other metals down. So let's look at the chart. The chart action, you're fighting at the 2648 level. You're not up here at the all-time high close that you had. Remember, this is a weekly chart of just closes. You're not there, but you also didn't fall out of bed. Is there pressure on the market? There is. What's going for gold is the tariffs are coming. High interest rates still look like they're here. We don't look like we have a Fed that's going to be accommodative in January to the marketplace. And the economic data that's coming out hasn't been terrible. You're now going to start getting the new jobs data, and everything starts again as the month gets going. When you look at the bigger chart on a daily basis, well, you're certainly not here in the 28 and a quarter area. You're now pressing back into the 26 and a quarter area. You know, I'm just giving you an example. You are down $200 an ounce, gives the market an upside target. The pattern on the swing line, in my charting course, my core course, you learn how to do this, and you learn how to do it by hand. In our charting software, it'll do it for you once you activate the indicator. However, if you can't do it by hand, you really don't know what you've got. And it's so simple. When I went to college, you always had it. I finally got the game when I understood that not to turn the page unless I understood what I just read. And cramming stopped everything else, and I was doing just fine as I finished up. It takes a while to learn that. Higher high, lower low. Okay. Look at the resistance. You have coming in the 100-day average in green, the 18, and you're liable to get a bearish crossover as early as Thursday in this market. Friday, if you don't rally, Friday for sure, could be Thursday. We'll see, and that's because you're going to drop the back values here that are higher. It's a 18-day average. When you look at the Bollinger Band, you hit it here, you had hit it on the upside, and you've really been stuck in the bands. They're going basically sideways, and that's what the market's doing. Instead of it latching on to the 18-day average, which it normally does, it decided to latch on, in this case, to the 100-day, and that began as we got just about into mid-month of December, and it's carried right on through. So that should still be a resistance point, and you're oversold. I define oversold conditions when the Bollinger Band has both or one of the numbers under 30 and they're not both going sideways under 20. It's really a simple idea, and I teach that in your enhanced Bollinger Band course. When we look at the gold-silver ratio, you see how the market has taken off, and you're at the highs, period. So what the market is saying is industrial metals are not going to have an easy time, but with the inflation, world uncertainty that's going on, gold's got the lure. And when you look at the difference here, you can argue all you want, gold has gained on silver, period. And this is the highest it's recently been. In the silver market, you can see how you're coming down. You're in a downtrend. You are oversold. The market has found, instead of latching onto a number, the rallies back to the 200-day average are resistance, and you're liable real easily this week, by Friday, you could have the 18-day average in red underneath the 200. It's not as easy to get under as the 1, and when it got under that back here, you can see the market just let go to the downside. In the copper market, you came down again to the Bollinger Band. Still bearish action. In the platinum market, higher high, lower low, oversold. And in the dollar, bullish still. Embedded reading, still looking really good on the long side. So, dollar strong, even with that. The gold rally today, even with that. You see the red in the bonds and notes. So the gold had a nice day today. Let's leave it at that. I'll pick up with you on Thursday morning. Have a great new year. Remember, you can click up here if you're on a PC to get into our sale, or go to iraepstein.com. You can't miss it. It's on the top left. Have a great new year.